In today's video, I'm going to show you the power of a negative risk to reward ratio and how I was able to grow my FTMO account by 1% in only an hour and 30 minutes. Calling quite a minor move of 6.1 pips and a 0.25 risk to reward ratio. Let's get into it. Welcome to the first video of the Fit and Funded YouTube channel. My name is Isaac. I am 21 years old and I have recently quit my job as a practice manager to fully focus on my health and get funded in forex on FTMO. The plan of Fit and Funded is to document my journey of getting fit and getting funded, and eventually using funded accounts to grow my personal capital. Now, as you'll see on the screen, I do use quite a small take profit. That is because the goal of this fund challenge of FTMO is to get funded and receive our first payout completely using negative risk to reward. Now, I've been trading for the past 1 to 2 years on and off, researching, learning and developing my skills. And I find that the conventional, 1 to 2, 1 to 3, which is quite common in the industry, doesn't work personally for me. I've been doing lots of research on the probabilities, and it's quite a misconception that you actually need a 1 to 1, 1 to 2 or greater to make money. It all comes down to your risk to reward ratio. Mine is at 0.25. So that means I'm risking 4 to make 1, a 4-to-1 ratio, 4 to 1. So on this trade, for example, on New Zealand JPY, I risked 4% of my account to make 1%. So the next factor is your win rate, and each risk to reward will have a different win rate you would need to break even and make a profit. So at the end of the day, it doesn't matter your ratio. All that matters is your ratio and win rate combined, and that's how you determine if you're profitable. So the first video, I'll document my current process on the FTMO challenge and explain the logic and reasoning of how and why I hopped in this trade on New Zealand JPY. So here's the FTMO dashboard. As you can see, there's a few more trades than one. We actually started this challenge back in June or July, 18th of June, and quite a lot has been going on in my personal life. We like to call it a rut, but we're back now. So we're taking a break. Initially, we started at 1-to-1s. We won 2, lost 2, and got to about break even on the account. Just a little bit of drawdown. And from this point is where I'm starting the negative risk to reward ratio trading. And that is today, the 16th of September, and the trade I took. So, and just to show you on C Trader, so the 1-to-1s, these 2 trades here were just to keep the account active. Then took 2 losses, brought us back to break even on the account. And then the New Zealand JPY buy, risking 4% to make about 1%. So going back to TradingView, the reason I took this trade is quite simple. After learning a lot about trading, I'm not trying to overcomplicate my strategy. So the weekly was bearish, lower highs and lower lows, stored out here, and then broke this structure point here. And that's when it swapped over to bullish to me, and this is generally going up on the weekly. Now this is quite a large time frame. I don't pay too much attention to the weekly, especially because I called a 6 pip move, but it is good to keep in mind my higher time frame bias. So was bearish, swapped to bullish, some bullish momentum. So my higher time frame is bullish in my opinion. On the daily, similar story. was trending down, broke the structure, trended up. Now we do have some recent breaks in structure here and here to the downside. So I was mindful of that when placing the trade. However, we did break the structure point here and then the internal market structure up there as well, near where price is at the moment. So I was also more bullish, or potentially swap into a bullish bias on the daily. And the 4 hour recent market structure was bearish again. The daily and 4 hour tend to be pretty similar, but lots of breaks to the upside and bullish momentum on the 4 hour, as you can see by the line. And we also broke the trend line to the downside. So I was bullish for my bias. Now the next part of my strategy after determining my bias using the weekly, daily and 4 hour is to draw the Fibonacci from the most recent, swing points. So from here to there, drew it. And I set my limit order on the 0.618 level of my Fibonacci. And this level has to line up with a fair value gap and a support and resistance zone that has at least 3 touches. So we got 1, 2, 3, 4, 5, 6. So lots of touches, a well-respected area. So the confidence are all my time frames are matching, a bullish bias, so I'm looking for longs, a recent bullish break in market structure to the upside that left a fair value gap, 0.618 level around that fair value gap. Doesn't have to be exactly on it, but is a confluence as price is drawn back to filled and fair value gaps, and then a support and resistance zone. And I set my stop loss at the swing low where I drew the Fibonacci, and I targeted a 0.25 risk to reward ratio. So 6.1 pips, 24.7 is the stop loss. And yeah, on this trade, risk 4% to make 1%. Some might think this is a crazy risk, but it is controlled. I'm comfortable risking that much on the account and the setup. I am, calling quite a minor move here. I did think I missed my entrance, but if I drop down to a lower time frame, it popped back down and hit it about an hour and 30 minutes. And now it's trending to the upside. Anyway, my plans are to stick with the 4-to-1 risk to reward ratio, but I will also be documenting different risk to reward ratios to see what works best with my strategy. I reckon long term, I'll either have multiple accounts with different ratios, or I'll stick with that 2-to-1 or 0.5. So if I risk 4%, I'd make 2%. Just because I won't have to work as hard to make back my losses. So for example, if this one would hit my stop loss, I'd need to win 4 trades, then a 5th trade to be profitable again. So 4 trades to be break even, 5 trades to be back in the green. Yeah, nice and simple, nice long to start. It is Tuesday today, I was going to say Monday, but yeah, slow start to the week. Also had a similar setup on CAD JPY that just hit. I didn't take this one because it wasn't as clean as a support and resistance zone. It had the fair value gap and the confluence of the 50 EMA as support, but I opted for New Zealand JPY. And yeah, that's by now. It did go into some drawdown. If I said, I'll show you the limit order. Did go into some drawdown, but definitely hit the 0.25 and actually have hit 0.5. So that's the power of negative risk to reward, and that's what I'm trying to capture. So if I set these two, risking 4%, nice 2%, that's me done for the week or month if I have enough capital. A long-term goal is to use my personal capital, and let's say I have a $10,000 account. I'll put $10,000 in. My goal will be to double that. Then after I double it, take the $10,000 out and keep going. If I blow that using my stop loss, just deposit another $10,000 in. And with my risk to rewards and ratios and the confidences, I know I'll be profitable in the long run. I do plan in the future to make a video explaining the expected values and the math and the big misconception of risk to rewards. It's something I've been very passionate about for quite a while, especially as I do go to the casino. I'm a baccarat fan. But like for roulette, for example, I forget the exact odds, but let's say it's a $5 table. You put $5 down on number 8, and the casino is risking making $5 to pay out. I think it's like 36 to 1 or 33, but about $360 ish. I haven't been in a little bit, and as I said, I play my baccarat. I'm just applying the same concepts here of negative risk. It's all around us in the world today. Even insurance companies, you pay a smaller premium and they have to pay a lot more. In the case of an unfortunate event, the world is, run and dictated by negative risks, and most of it is just about probabilities. And that's what I'm doing with my trading. I'm doing the TA, supporting resistance, Fibonacci, macro trend, just taking longs in an area of interest with that macro trend with several confluence, and that bumps up my win rate, and that's where I get my edge over the market. Most of these have this probability of playing out. So if I went through and put a short randomly, a long randomly, it's about a 50% win rate. A little bit less, a little bit more. Same as negative risk. Let's say I put this down, I'd win 90% of the time and lose the remaining 10%. But with an edge, I could maybe bump that up to 92, 93, 94, 95, and that's where I become profitable. Awesome. That is it for today's video. I'll continue documenting each trade I take on the FTMO challenge with a negative risk to reward. Thank you for watching.